नमस्ते। मेरा नाम हर्ष चौधरी है। मैं DU का स्टूडेंट हूँ। आज मैं आपको प्राइसिंग ऑफ इंश्योरेंस प्रोडक्ट के बारे में बताना चाहूँगा। द प्राइस इज a single most element of marketing mix that produce revenue and other element of product. Price is also the flexible element, unlike the feature product and channel commitment change quickly. Setting the price. A firm has to set a price when it develops a new product or when it introduces regular product to new distributor channel geographical or when it enters a bit of new contract for first time. Just segment an example I will tell you. The ultimate expense या प्राइस क्या है। अगर हम कार्स की बात करते हैं तो रॉल्स रॉयस, इसका गोल्ड स्टैंडर्ड क्या हुआ जगुआर, लग्जरी क्या हुआ BMW, स्पेशल नीड क्या हुआ वॉल्वो, मिडल क्या हुआ बक मारुति जैसी गाड़ी, इजी कन्वीनियंस में अफोर्ड और मी टूल्स बट चीपर मारुति. There can be competition between the price quality segment as per the three market given three buyers. Those who invest in quality, those who invest in price, those who balance between both. Hence, it is possible for all three competitors to coexist in same market. There are many factors that have influenced the price. 6-step process: selecting the pricing objective, determining demand, estimating cost, analyzing competitor cost, selecting pricing method, selecting final price. Selecting pricing objective की हम बात करते हैं. A company has to first decide whether to position its product. The clearer the objective form, the easier to select a price. The company have to pursue any of the 5 objectives. 5 objectives जो उसे पूरे करने वाले सर्वाइवल, मैक्सिमम करेंट प्राइस, मैक्सिमम मार्केट शेयर, maximum market skimming, product quality leadership. Most companies try to set price that will reach maximum current profit. The demand and the cost associated with alternative price is estimated and the price that produce maximum current price. Cash flow or rate of return on investment is chosen. The strategy is assumed that firm has knowledge of demand and cost function. However, in reality, demand and cost function are difficult to estimate. Emphasizing current financial performance may lead to company to ignore the effect of other marketing mix variable, competitor reaction, legal restraint affecting performance in the long run. The condition which favors setting a low price. High price sensitive market and stimulate market growth due to low premium. Fall in production distribute cost with accumulated production experience. Reduce actual and potential competition. In the insurance industry, companies set low price premium to cover a large number of people. For example, insurance companies offer comprehensive coverage, offer protection to billion of riders of two-wheeler at minimum cost. This strategy increases sales of comprehensive policies like with all the risk of a loss variable, things like jewelry, buildings, so they provide insured against fire, theft, burglary. These kind of policies provide additional benefit to customers by changing little extra. There are some companies setting higher price in order to skim the current market. For example, Intel, the manufacturer of microprocessor, into a market skim pricing. In this strategy, the company introduced product in the market at a higher price, making purchase just worthwhile for some. Slow down the competitor to introduce similar product at company lower price in order to attract the next layer price sensitive customer. Market skimming is advisable if there are large number of buyers with high demand. Cost of production, less number of units cannot be so high, so they can cancel the advantage of charging a higher price. The higher initial price fails to attract more competitive market. The higher price communicates the image of superior product. अब determining price की बात करते हैं. Each kind of price is at different level demand as they have a different impact on company marketing objective. The first to instrument demand is to understand the factor that affect price sensitivity. There are 9 factors that affect price sensitivity. Unique value factor on a buyer or less, Sus- Substitute awareness effect. Buyer are less price sensitive when they are not aware of substitute. Third, difficult comparison effect. When buyer cannot easily compare this quality of substitute, they are less price sensitive. Total expenditure effect. The buyer is less price sensitive if the expenditure is less than his total income. End benefit effect. The smaller the expenditure is to the total cost of end product, the lesser is the price sensitive of buyer. Shared cost effect. When part of a cost is borne by another party, the buyer are less price sensitive buyer. Sunk investment effect. When the product is used to conjunction with asset bought previously, the buyer are less price sensitive. Price quality effect. When product is assumed to be more quality, prestige or extra, the buyer less price sensitive. डिमांड एनालिसिस की हम बात करते हैं. कंपनी with different material demand का the first material involves strategical analysis of price quantity sold and other factor estimate the relationship appropriate technique required. The second method involves conducting price experiment. Price of several products sold in discount stock and varied and result demand. The alternative way to chart different prices in the territories. Third approach to ask buyer about number of units they would be at different proposal price. However, there is a possibility of buyer understanding the purchase intention at higher price in order to discourage the company from setting higher price. Estimating cost. The price that a company wants to charge must cover the cost of production, distribution, and selling the product, and must also include fair rate of efforts and return. Risk. Company have two type of cost, fixed and variable. दो तरह के cost होते हैं, एक होता है fixed, एक होता है variable. Cost that do not vary with production or sales revenue in terms of fixed cost, and they are known as overheads. For example, regardless of the output, a company must pay a bill each month for rent, electricity, salaries, etc. Cost that vary directly with the level of production termed as variable cost. Consider example, a hand calculator involves the cost of plastic, microprocessor, chip, packaging. Although these costs tend to be constant per unit. Second, they are called variable because their total varies with number of units produced. Differentiating marketing offer. Nowadays, companies try to offer to meet different buyers. A manufacturer will therefore try to negotiate different terms with different retail chains. While daily delivery required by one retailer makes up twice a big delivery in order to get lowest price. As a result, the manufacturer cost and profit will differ with each chain. Companies that fail to measure their cost correctly not only measure their profit incorrectly, but are also likely to misallocate the marketing effort. Companies who identify their costs, they may build profitable companies. Target costing अगर हम बात करें तो cost change with the skill of production and the company production experience. Cost can also be changed if company professional workers make a concentrated effort to reduce them. A method called target costing is used by a Japanese company to establish a new product design function. After carrying out research to identify a product appraisal, a competitive price, the price at which product with sold determine the target cost is then arrived by deducting the cost desirable or profit margin and cost element design, manufacturing, sales, and broken down company, analyzing competitor cost, price and offer. The firm must take into account the competitor cost, price and possible price reaction within a range of possible price determined by market demand and company cost. If the firm offer is similar to the major competitor offer, then the firm will have to price its offer closer to that of competitor or else lose sales. The firm will not be able to charge more than the competitor. Firm have to be aware of the competitive price. Selecting a pricing method. After considering the 3 C's, the customer demand schedule, the cost function and component price. There are 6 price setting methods. Markup pricing. The price is charged by lawyers and accounts by adding a standard markup at the time of cost. It includes total project cost with a standard markup profit added to it. Second is target return pricing. In a firm determine price that would yield to target rate of return if investment. Public utilities which need to be obtain fair return on the investment also use target pricing method. Perceived value pricing. Companies are setting price on the basis of customer perceived value. It is only through the market research that a firm can determine customer perceived value and use this as a guide to effectively marketing. Other marketers fix their price on the company basis, not customer basis. Value pricing. Companies charge a low price for high quality offering. Value pricing implies price that represent a high value offer to customer. Going rate pricing. Here price is set by firm which is based on competitor price. The price can be higher and lower. In oligopoly industry, firm charge same price. Some smaller firms follow the leader when market leader changes its price rather than when the own price or cost change. This strategy is very popular because when competitive price get high, they set it low. Sealed bid pricing. It is a component pricing where the firm sets sealed bid price set by firm based on expectation of how competitive will price their product services rather than a consideration of firm own cost or demand. Their main purpose to win the contract was setting lower price, but firm cannot set price below cost. Selecting final price. Companies set price on various factors. Psychological pricing. They are consumers who think price is an indicator of quality. For instance, price and quality might are not same. For example, tofu prices are similar in India, but the quality is not same, especially in Delhi. They are mother dairy, Amul dairy, but there are also that are not offering good quality of tofu. There are some families in Delhi who are making tofu from above 100 plus. They are best to take tofu. There are 4 places in Delhi: Chandni Chowk, Badrpur, Kotla, बर्फ खाना, ओल्ड सब्जी मंडी. ओके, मैंने बर्फ खाने का नाम मैंने एक बुक लिखी हुई है 4th सेमेस्टर में. मैंने बर्फ़ खाने का नाम अपनी किताब में दर्ज करवाया. पापा जो हैं नॉर्थ कैंपस से पढ़े हुए हैं ना. मैं बर्फ़ खाना गया तो था, पुरानी सब्जी मंडी वही तो है. बर्फ़ मैं उतरा खान तेसरी पे उतरा मेट्रो से, वहाँ से बस पकड़ के मैं बर्फ़ खाना गया था ओल्ड सब्जी मंडी. फिर वहाँ से बस पकड़ के मैं FMS कॉलेज गया. ओके, पापा वहीं पे 3 साल रहे हैं, तभी हो जाता है बर्फ़ खाना. Price become less significant indicator of quality when accurate information available. Influence of other marketing mix element. It is based on pricing of advertising brand quality. It has been found that a brand with average quality but high relative quality advertising budget. Company pricing method. The price charged by a company must be based on pricing policy. Company will pricing department development policy. Impact of pricing on other party. When the distributor dealer feel about price, they keep watching on other company.